You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we've got a pair of interviews from a conference I attended. Let's just say today we're going to be putting a bow on the 2025 fall conference season with a couple of things I attended recently. This one from down at the FinTech Talents Conference down in Austin, Texas. Carlos Figueiredo, the global head of payments for SAP Fioneer, spoke with us, as well as Michael Beard, who, for the purposes of right now for this conversation, let's mention that he's the co-founder of the Association for Cannabis Banking, just because that's probably the juicier title that can whet people's attention. But we'll get into a lot of other topics with him, including a lot of great customer research that he's got in his background as well. So we'll be getting to that in just a second. As always, I'll first remind you can find more about the Best Innovation Group by checking out the website big-fintech.com. You can also join us on Wednesday, December 17th, assuming you're listening to this relatively soon after it drops. Still get your time to ask for an invitation to our last credit union town hall of the year. Again, that's Wednesday, December 17th, a live session, 3 p.m. Eastern Time, noon Pacific. Anybody who's joined before hopefully will know the drill. Live, interactive, bring your thinking caps. We love to have participation, but it's an open conversation, an open dialogue around some of the hottest topics that are facing the credit union and fintech industries these days. And this episode, this session, I think we're going to be digging into the bingo card that we set up all the way back last January and basically kind of taking assessment of what's happened this year. And I think, if I'm not mistaken, we may finally have a winner too. So we'll be revealing that next week on the 17th. So it's free to join, but you do need to register in advance. cutownhall.com is where you can go. You'll find past episodes, past sessions of the town hall there, and you'll also find a place to request that invitation, and we'll send you the link. As I said, last couple of conferences of the 2025 fall season. Last week was one of my favorites right here in my hometown of Atlanta, the Hope Global Forum, the annual event from Operation Hope. Every year, the same thing happens to me. I get busy. It's right down the street. I go, oh, man, I haven't booked an airplane ticket. Man, I wonder if I should really make the time to go because I got so much else to do. I always find myself finally saying, no, you always love this thing. And sure enough, you get there. And I always think, man, am I glad I went. It's one of the most inspirational and just kind of awesome events I go to every year. The short kind of way to describe it, I guess, is financial inclusion is the primary theme of the conference. But there's so much more going on. Several CEOs always attend and speak. Ed Bastian from Delta has been a regular and was there again this year. We have the owner of the Atlanta Hawks, the owner of the San Francisco 49ers, talking about the sports industry. Van Jones, former commentator on CNN, now an entrepreneur with his own incubator, looking at new technology. Great conversations and a lot of conversation about artificial intelligence. Van Jones talking about how it's a real leveler of the playing field. A whole bunch of folks, black, white, whatever race you want to look at, don't understand AI. And that's kind of, to some extent, a great equalizer. Because if no one gets it, we're all kind of starting from equal footing. One of my favorite things that happened was a breakout session on inclusive AI. Chike Agu, who is at the Harvard Center for AI research, he in the workforce, he talked a lot. I thought he made some really interesting points about artificial intelligence. According to him, I haven't actually checked this out, but it rings true to me. It's the first major technology not to emerge from government research. And when you think about it, the space program gave rise to a whole bunch of stuff. The internet came out of government. So, this is a very different one. And his point is the promise and the peril are both quite real. I think that's an interesting point. He also mentioned that it's important that we get this right because we're going to have to do it all over again. There's so much new tech coming down the pipeline. We really have to figure out how to actually socialize and operationalize these things in society more broadly because it's going to be happening over and over again. his point, when people are always concerned about losing jobs, he's like, don't worry about losing your job to AI. His point is, worry about losing your job to somebody who understands how to use AI, because the jobs will be there. He suggested that prompt engineering is where humans can really provide enduring value if you're looking for a growth industry. I've talked to some friends who have taken some courses at this point looking into how to best optimize your prompts to get the most out of generative AI, which I find to be pretty interesting. One of the other panelists talked about the opportunities to remove friction from the system, which I think makes a lot of sense. And I kept hearing a couple of phrases we've used a lot here, not just on the Big Cast in general, but also overall in the financial services realm. One, boy, is trust important, just as it is in financial services. That's going to be a key player in AI. And the human in the loop. No one's suggesting that we totally abdicate human responsibility. Oh, I shouldn't say no one's suggesting that, but at least the people at this conference were pretty clear that empathy and a human component remain very important in this. Chelsea Rosellis from Cisco, and leading up one of their AI initiatives, she had some interesting research too. And when we talk about intrinsic bias, secondary bias in the products, she pointed to Stanford research that found that the predictive credit models that come out of AI are 5 to 10% less accurate for low-income borrowers, in part because they have thinner files, and therefore there's less data to train these things on, which just leads to amplified bias and kind of a perpetuation of some of the problems we've had in the past. So things to kind of keep your mind around as you look into these. So that was last week, and really enjoyed that. Kudos to the folks at the Hope Global Forum and Operation Hope. They always put on a good show. A couple of weeks, maybe just 1 week before that, I can't remember exactly the timing, was a conference down in Austin, Texas, FinTech Futures, that I had the opportunity to join, and had some great conversations down there. I had the honor, I was asked to moderate a panel called Show Me the Way to Pay, getting into the whole notion of instant real-time payments, modernization of the payment system, digging into lessons learned here versus other countries, etc. Let's start out with that one. Carlos Figueiredo was one of the panelists, who is the, as I mentioned earlier, the head of global head of payments for SAP Fioneer. And as we talked, I could just tell there was plenty more we wanted to cover. So with no further ado, let's have a listen to my conversation with Carlos Figueiredo. I'm here in Austin with Carlos Figueiredo, the global head of payments for SAP Fioneer. We were on a panel together yesterday. And as I learned more about your background, I'm like, okay, we've got to dig a little bit deeper into some of this detail. So thanks for taking the time. Your background, well, first off, I'm sure our listeners are familiar with SAP, maybe not as much with SAP Fioneer. Can you say a bit about that unit?
So Glenn, thank you very much for giving me this time and to be able to speak to you. I think we had a great panel yesterday, and I think we could have been speaking for hours.
Easily.
So yeah. So again, so I think it's a great question, the difference between SAP and SAP Fioneer. I think that's something that everyone should really understand. SAP, as we turned into 2021, realized that there was an opportunity to really manage, to help, to assist, to really focus on the financial sector with the products that SAP had. So giving it a real focus into the financial sector. So in doing so, they spun out SAP Fioneer. Now, SAP Fioneer, it's its own company in its own right. It's only 20% owned by SAP, and I think that's a really important point because it means that we keep that ability to do our own thing, really.
And also access to the SAP technology, foundational software. Absolutely.
So we benefit from standing on our own 2 feet. We have a private investor for the remaining 80%. But on the reverse side, we benefit from all of the technology and innovation that SAP has. The IP that we got from SAP is now our own, as mentioned, but any innovation we get for free from SAP. Our distinction is clearly that SAP works on those corporate commercial clients where we specifically work with banks, insurance, and finance. So that's the clear demarcation.
And making a bigger presence as time goes on in the States, a bit of a start more in the European market, the European theater?
Well, absolutely. I mean, for me, as global head, my go-to-market strategy is EA, obviously Europe, DACH, and a focus around Middle East, Africa, South Africa mainly, but Australia, New Zealand. But we're really now paying attention really to what's happening across North America, but in the Americas in general.
So I wanted to really get into, given your experience, and again, you didn't mention Saudi Arabian Monetary Authority you spent a couple years.
Yes, I did, yeah.
SWIFT.
Yes.
If you can hear the activity, we're out on a porch here in Austin, so we're getting a little bit of background noise. And it sounds like you were involved heavily in the rollout of multiple countries' instant payment execution.
Yeah, I was very fortunate to be invited to be the head of data standards for the OBIE, which is the Open Banking Implementation Entity. That's where open banking was born across the globe. So that was in the UK. So after that, I've pretty much been involved in helping most countries with open banking and open finance implementations, except for Australia and Brazil. I've been involved pretty much in all of them.
So from a lessons learned standpoint from that, we're seeing both open banking and a lot of the panel yesterday was about instant payments, faster payments. What do you see in terms of the near-term opportunity for the U.S., the growth curve, and the impediments? What can we learn from other markets? What's different here that may not apply in terms of the way it rolled out so far?
Yeah, so there's a couple of lessons learned, definitely around regulation. So the fact that how open banking and open finance has been implemented, whether a fully regulated or a very soft regulation, has had an impact. Mm-hmm. So the more fully regulated countries have benefited from, yes, a harder regulator that's imposed timelines.
Thou shalt implement by X date.
Absolutely. But that's benefited at the same time by the implementation actually going through and seeing that happening. On the softer side, some of the benefits you could say is a bit of more collaboration and input from the banks. It's just, unfortunately, some of the banks dragging their feet and wanting this to be stretched out is the negative side of that. So a lessons learned here is that it's everything that has been dragged out by banks has been simply due to lack of knowledge, of understanding really the benefit of what open banking and open finance is. If they can break that barrier of understanding that it's not all about just providing data, but it's that they can consume that data as well.
That's one of the things we talked about yesterday. It's always framed data providers as thought of as synonymous with banks, and maybe that's largely true today, but someplace down the road, it's not going to be. No, it flows both ways.
Absolutely, and it's there. So banks have all of the right to be able to consume the information that is requested by the regulator to post. They can also consume. So it gives them great opportunity to also create new products and services and leverage the data that is being shared by their competitors. I think for the US, we already have great examples of APIs. API technology has been out there for quite a long time here. So we already have that. And I think some of the restrictions come from, we are from a 50 states perspective, we have a lot of regulation. We have over 4 overseeing regulators, if you will, so monetary regulators and others. So I think that the challenge comes from being able to make it cohesive into a 50 state-wide open banking. That's really a big, big challenge. I don't think it's a barrier that we cannot overcome. I think it's a question of the different entities, what should be to come together and really, push this through.
I think the 50 state kind of complication is definitely relevant. I always wonder also the fact that we have 9,000 financial institutions. Yes. Most countries maybe get the triple digits, but not much. How big of a problem do you see that in terms of a complication?
You know what? I think it's easy, right? 9,000 institutions fully understand what credit cards are. True. Right. So I think it's just about seeing the opportunity. And I think that's where we have to show the value. So if it doesn't come from the institutions doing themselves, the big player here are the fintechs. It's really the fintechs. The fintechs understand the power of sharing data. They understand of making that into even a new revenue stream. So I think that the power of data will drive that. Consumers are demanding this more and more. So I think there's a huge play for that middle tier institution to push together with fintechs. And this is a key thing, is collaboration. I think if the fintechs can collaborate, continue to show their strengths, this will come to fruition.
Speaking of a new revenue stream, I'm kind of curious on your thoughts around Section 1033, which supposedly back under reconsideration. But in the meantime, while the regulators are considering, we've got Chase moving forward, setting deals with Plaid, now announcing a few more, saying that they're looking at hundreds of millions of dollars of revenue. Where do you stand relative to the ability to charge for this data? How do you see that shaking out?
Yeah, so that's been a big discussion globally. There's even in the UK, we've talked about freemium versus premium APIs. I think that banks should have a certain right to be able to charge for extra bits of information in that data sharing. I think it's not a bad play. I would rather see a full value in free data, but I can see where it can be a sharing of or a premium for certain levels of data should be there. But at the same time, they should also be very aware of that free information flow is a benefit to themselves as well.
And that does seem to be the way, as I understand it, I haven't seen the specifics, but it's shaking out with Chase. It's kind of a multi-tiered level where there may be some free access to certain types of data, and the more valuable stuff has a price to it. And again, the piece that I wonder about is, at some point, does the de facto market rate get set? You can't strike deals with 9,000 institutions.
No, you can't. And this has been a very, very big question: is how much do you charge for a premium API? What's that data even worth? That's been the silver bullet, or that's been the question. So nobody has that. No, and there's not a country that has really nailed what does API premium data cost should be. So I think that's something that still has to be sorted.
That's a really good point. That, I mean, even the other countries that are further along, they don't have an equilibrium final answer on this stuff.
And the key thing here is, should the regulator come in and really put a limit, a cap around what that data cost should be? I think it's if banks make it so expensive, they are indirectly trying to not participate by using the cost as an excuse. I think that the regulator may have to come in and cap that premium kind of API information.
And as we've seen in other countries with interchange, they're more than happy to do that in other countries. So,
yeah.
well, you're obviously extremely knowledgeable and have had lots of experience in this space. If people want to find out more about you or SAP Fioneer, what's the best way to do it?
Yeah, definitely. My email is carlos.figueredo@sappioneer.com. They're always happy to also link up on LinkedIn, so I'm there. So yes, please email or LinkedIn.
And the SAP Fioneer site, pretty intuitive URL?
Absolutely, it's there. From an open banking perspective, we probably need to work a little bit more on it. It's just, I think, a hidden feature of what we can do, but more than happy to if they can reach out to me about it.
Wonderful. Carlos Figueredo, Global Head of Payments for SAP Fioneer. Thanks for taking the time.
Thank you very much.
So that was the session that I was involved with directly. One of the other ones that I attended was a conversation with a gentleman by the name of Michael Beard, who I found myself scribbling down notes furiously because I thought he was making some really interesting points. So I tracked him down afterwards and was happy to hear, A, that he was willing to talk and share some of these thoughts, and B, we had a lot more common kind of background than I realized, and he had a very, very rich background of other very interesting things he'd been doing, even before the two very interesting things he's doing right now. So without kind of giving any more away, why don't we jump into my conversation with Michael Beard? I'm here with Michael Beard. I'm not even 100% certain how to introduce you, Michael, because you wear a whole bunch of different hats. We met a couple weeks ago at FinTech Futures down in Austin, Texas. Michael was running a session on turning insights into action and had a couple of observations I wanted to drill down further on. So, Michael, first off, thanks for joining us. And I know you have a role at Southwest Capital Bank and also at the Association for Cannabis Banking. If you can kind of explain it, I know you've got some interesting stuff in your resume before that as well.
Thank you, Glenn. Yeah, banking's been in my blood since I was back in college. So I've been doing this since the late 70s, and had more recently back in right during the Great Recession had launched Bankers Hub, which was my first entree into doing an online banking training portal.
I was going to say, I had several people, and even before that, you were with another portal
Banker
called
Stuff.
And I know some big fans of Banker Stuff. I was familiar personally with Bankers Hub, so that was another one that just kind of caught my attention.
Well, in Banker Stuff, we sold in 2012 to Q2. Hank Seal and his team. And then we launched Bankers Hub shortly thereafter and kept Bankers Hub till 2023 when we sold it to Noggin Guru, which is a company looking to get into the educational space in financial services. So we had been doing, since 2020, we'd been doing cannabis education and launched the industry's first cannabis banking professional certification in March of 2020. And so when it got time to sell Bankers Hub, it seemed like an opportune time to spin off the cannabis education, which Noggin was fine with. So we launched the Association for Cannabis Banking on stage at Money 2020 back in 2023. And it's been going great ever since. And then this year, I was pleased that a local institution, we're here in Albuquerque, New Mexico, Southwest Capital Bank brought me on to be vice president of their treasury management department, which is very consistent with what I used to do with Bank of America and other institutions. So because Southwest Capital is also a Canna-friendly bank, it really brought together the two aspects of my life right now, which is traditional banking combined with cannabis compliance, regulations, best practices, and so on. So it allows me to both advance what they're doing here in Treasury at the bank, but at the same time be able to add value to their cannabis outreach as well.
And I know we back in the day, as I would say, it's amazing that we can talk about it that way. But we did a good bit of coverage when cannabis banking was relatively new, and also pretty active. A lot of credit unions were first movers in the space, and I asked you just before we started recording, credit unions are also active participants in your association, right?
Absolutely. Bankers Hub was always banks and credit unions, the two combined. The Association for Cannabis Banking, as you said, credit unions really laid the groundwork early on for a lot of what we're doing, partially because of the way that they're regulated. And then state chartered banks like Southwest Capital got into it as well. But because we got in so early, a lot of our early members in the ACB turned out to be credit unions. And they're doing some of the more interesting things, if you will, in terms of reaching out to their base, working with their businesses and that. So I know bankers even can learn a lot from seeing how credit unions have really been able to capture some market share in this.
And that's, it's another one of those situations where, it sounded very controversial at the beginning and you get people just get used to it. And now I don't really hear a whole lot of blowback.
That's it.
Well, and we'll get back into that. But one of the things that kind of really caught my ear, you also spent some time at JD Power, as I recall, on their,
Yes,
on the
about
credit
four
card
years
side.
run. Yeah, about 4 years. I was managing director for their banking and credit card practices within their financial services division. So it gave me the opportunity to work on their annual customer satisfaction studies, not just in retail banking, but I also handled small business as well, and then credit card, as I mentioned. So um, really, it was during and just after the Great Recession. So it was a great time to get the voice of the customer feedback at a time when the voice of the customer wasn't really a friendly one to the banking industry.
I've always been fascinated with the type of insights they come up with. And I'm not sure if this one comes from your period there or if it's just something you observed later. But one of the things you mentioned on stage was that JD Power found a correlation between customer satisfaction and the proximity, I guess, of one or more branches to the consumer, which
Absolutely.
you made a great point of careful about, again, correlation, causation, whatever you want to call it.
Well, it's an example where the right answer doesn't necessarily mean it's the best answer. And we saw this in a number of areas. I mean, the study itself, the survey was voluminous. They capture about 250,000 responses a year, so there's a lot to go through. And I had a team of research analysts who worked for me. They crunched the numbers, ran the crosstabs and the multivariate correlations and all of that. And what I started to learn, and one of the reasons that JD Power brought me on was less because I'm a statistician, I do have a background in that, but more because I'm a banker and they needed the banker influence to see how the data was lining up to what the industry was actually interested in. And an example of that, which I've done before, and this came out almost every year, Glenn, where we asked customers the questions among others, but we would say things like, how many branches does your institution have near your home, and how many do they have near your workplace? And when we started running regressions on the answers, what we discovered is there was a clear breaking point at three. So banks that had three or more institutions near a person's home or workplace typically scored higher on customer satisfaction on their JD Power scale than banks that don't. So it would imply that Bank of America would do well and Southwest Capital or smaller institutions might not. And so analysts who are out of school and may not have worked for a bank came back every year and they would crunch the numbers and they would say, there's a major effect on recommendations. We recommend that banks build more branches so that everyone has three branches near their home and three branches. And
Great way to get you thrown out of somebody's conference room.
well, that was kind of what I said, Glenn, because the idea here was statistically they're right. I mean, they found a cause and effect. They found that this was a major driver of customer satisfaction. And so technically, I couldn't argue with their point. Their point was borne out by the numbers. But as you indicated, there's a practical aspect of this that when the data hits reality, sometimes the two don't get along well. And what I did is I had them go back, sharpen their pencils, and I asked the question. I said, so why do I have winners of the JD Power Award like Frost Bank in Texas or Arvest and others who are relatively small community banks? I mean, 5 billion, 10 billion. And yet they do really well in the study. And yet the customers themselves say they only have maybe one or two branches near their home or workplace. And sometimes, when you actually read their comments, the branches may be miles away. They actually drive past Bank of America and Wells Fargo to get to their bank. So what I ask them is don't do it statistically. Look at banks that defy your logic. They have fewer than three. Take a look, run crosstabs, and tell me why are they outperforming the big guys when, based on your own findings, they shouldn't be. And we would statistically calculate if you call the customer by name when they come into the branch, it lifts your score like 23 points. So it narrows the gap between you and those big guys who simply create volume, and you start to create quality. And what we statistically could show them every year is that quality is how you narrow that gap. So it's not just about building more brick and mortar, but it's really about how you interact with your customers on a daily basis. So they drive 10 miles to get to your branch. When they get there, you want to show them the appreciation of them having gone out of their way to come to your bank because you're their primary institution.
Well, it's funny. I want to test out one of my long-held theories, and I don't know. I realize this is kind of back in the background of your resume. So I don't know if you even remember this or if you guys pursued this part. My belief is always, obviously, when you have the opportunity for that in-person interaction, you want to hit those moments of truth. But it seems to me that one of the keys is also to the comfort level of knowing you can get in touch and have that experience in person if you choose to. It's not even, I mean, I don't know that you necessarily want to drive the volume to the branch. You want to make sure that that comfort level is there, that you could, if the person chose, had a situation where they really wanted that face-to-face interaction.
Well, and the market certainly is different now than it would have been 15 years ago. Digital channels and the whole digital transformation of brick and mortar, it was only a dream, really, from what we envisioned back in 2010, let's say. But because we have positioned ourselves as an industry to wanting to give customers more access and channels than fewer. Very few banks today are willingly wanting to drive their customers only into one channel. You have an ATM, what do you need a branch for? Or you have a phone number, what do you need to come into a branch for? So those times when customers do come into your branch, it's almost another reason why you want to follow some of those best practices, like from JD Power, is because that customer may be coming in not to cash a check. They can do that online. They can deposit the check using mobile banking. They probably have an issue.
Mm-hmm.
And one of the other key findings we found with JD Power is problem resolution is kind of a binary driver within this. And that is, you've got John Goodman, not the actor. John Goodman used to run a company called a Technical Assistance Research Program in Washington, D.C. And back in the 80s, he's the one who came up with the statistic everyone loves to quote. If a customer has a problem and you resolve it and exceed their expectations, they're more loyal to you than had they had the problem, never had the problem in the first place. And we found that that's statistically not true. Not having a problem is a good thing. Not having climbing back up the mountain after you slid down it in the mud isn't an easy trek. Getting back after you mess up a customer's account is not easy. So what we were discovering is problem resolution became a major driver in this. And when a customer comes into your branch, chances are they want to have a more extended discussion about something that's on their mind. So the person in the branch has to be knowledgeable, probably a universal employee by these days.
Yeah.
So if they walk up to a teller and they have a problem, the last thing you want to do is send them over to the platform and have them talk to a PBR or somebody. And most of these branches are so small today, Glenn. They probably have 5 people and they're all universal bankers. So
and that's one of the challenges these days also. It's good news, bad news is there's less demand for the branch, therefore there's less people staffing the branch, which means that they better be a jack of all trades. And then If you do wind up getting hit with a bunch of folks at once, I had a friend who just mentioned that to me. He had to go in and he was like, I was shocked how much activity there was. Well,
yeah.
Guess what? They can't keep 13 people at the beck and call if they're not going to come in every day.
Well, that's it. And that's really, so the data was illuminating.
Another thing in terms of using data the right way, AI obviously is all over the place. And you made an interesting observation also on stage that you think it's a valuable resource. I see you're using Read AI right now as gathering the notes from this call. But good as a thought starter, but you'd be hesitant to just take recommendations kind of blindly. And I mean, I'm sure that line in the sand may be changing as time goes on, but and I think you mentioned asset liability management kind of as an example for things you might be a little bit more cautious about.
Yeah, AI is a great tool. We're big believers in it. When it first came out, we were one of the first ones to jump on the bandwagon because of its strength, its skills. The problem we ran into very quickly, though, is for very specific questions, like if you're asking it to analyze a customer portfolio or you're looking for a biography or something like that, we have found it it might be 50, 60% accurate in some of the things that we've been doing. And so what we've realized is it doesn't take the place of shoe leather. It doesn't take the place of doing your own homework. So we've been using AI a lot when it comes to asset and liability management within the banks and things like that. I've been using AI as a means of taking some spreadsheets that I've created. So I feel comfortable with the data that's in it. I want AI to see, are there subtleties within the data that I'm missing? So if I'm making recommendations to the committee about specific customers, either depositors or borrowers, there might be some subtleties in there that I'm missing. So I use AI more like a scalpel. Whereas a lot of people, I think, are using it kind of like, oh, it's going to write my term paper for me, or it's going to do that. I caution you not to do that. Use it to augment what you're writing. Don't do it the other way around.
Yeah, I fully agree. And I'm curious, have you seen that it actually is getting better along the way, though? I mean, some of those things you mentioned, it does seem it's a little bit of a learning by doing, which is kind of the way it's designed.
Absolutely. If people who remember when ChatGPT first came out, what, 2.5 years ago, there was that 18-month, like the data was cut off like 18 months ago when they
Right,
trained it.
right.
And so when Gemini came out, then it was even more up to date. So a lot of people looked at Gemini because that had information that was more current than what ChatGPT was, because after a year, that data was pretty much useless. Now I'm finding that when you query ChatGPT, it'll even tell you things that happened yesterday, earlier this week. So it is getting better on its timeliness and relevance. But again, I would be really hesitant. And we've seen these stories come out of the law side where lawyers have presented briefs that were taken right out of AI and got busted by the judge.
You sound like you're a proponent, like I am, of the human in the loop approach.
Oh yeah. Oh no, I don't want the nukes all depending on AI. Let's put it that way, Glenn. But I think AI is going to be a great tool. I think it's got. I don't know if it's worth the hype yet that it's getting, but there's a lot of applications within banking that I can see AI really becoming instrumental for. So
The way I'm curious if you kind of buy into this analogy that I've used is, I thought about it, going back a year or so ago, kind of like if you had engaged a high school or maybe a freshman in college intern over the summer and you give them a
yeah.
project and you're not going to just release it to the world. You're going to think, okay, that was a nice start and I'll take a look at it. But, you got more work to do. I would say maybe it's progressed now to maybe a graduate of college, maybe just like a brand new hire. But again, it's not something you're going to release to your client base.
No, and you have to be ready. And I've discovered this here working at Southwest Capital too. Um, you can have it crunch numbers for you and produce results and summaries, but you better understand how it came about that because you're going to get asked. Someone's going to say, maybe AI creates the score. Know how that score got calculated. What were the weights that went into it? Whether, because if you just hand someone a spreadsheet saying, here's my work, and they start asking you, how did you come up with this? Or what were your assumptions? And you relied on AI and you don't know how the spreadsheet was created, that's not going to look good. Whether it's a boss or a professor or anyone, you really have to go back in and see what did AI do to come up with this? And do you agree with how it did it?
Yeah, they avoid the black box.
Exactly.
So let's jump over to the Association for Cannabis Banking. I mean, we were talking before that in the early days it was very controversial to even be involved in the space, and I think that started to kind of go. What kind of an evolution have you seen in terms of both the activity in the space and just the attitude and the need to kind of sell into a board of directors, things like that?
It's become easier. I think that not in every state, but we now have some form of legalized cannabis, I think in 41 the last time I had looked, either medical, recreational, or both. I think it's becoming more normalized, Glenn. I think people are getting used to it. I don't think we talked about this at the conference where brand risk and reputational risk doesn't seem to be as major an issue as banks may have thought it was, and credit unions especially, who are very tied into their communities, uh, might have thought that initially. But I think the way banks have approached it and the fact that it's very much grounded in compliance, I think a lot of customers and public see it as a yawner issue now. It's kind of like, whatever. So I think banks have to decide from a risk perspective how deep they want to go in. Lending is the hot topic now for 2026. And banks have to decide, it's one thing for the companies to give us money. It's another thing for us to give them money.
So you're talking about lending
Uh,
into cannabis businesses.
yes. So that's the hot topic for next year that we're seeing and hearing with the association. And I think it's going to decide whether banks and credit unions really want to get into this with both feet, because that's going to be the determining factor. But the margins associated with loans are so much better than they are on the deposit side.
Makes sense. And is that something that's kind of being tackled on a state-by-state basis from a regulatory standpoint, or is it just a matter of people getting comfortable with giving it a shot?
It's state by state. I think it's more institutional though, Glenn, because banks always have the freedom to lend. It's just these companies aren't protected by bankruptcy laws, and we're starting to talk about receiverships. And so, if you're into a CRB for 200,000-300,000 as a smaller bank, that CRB starts to go under, you're going to have some problems. And the more CRBs you have, the more problems you're going to have, especially if they're geographically not decentralized. So you've got everyone here in Albuquerque, you've got everybody in New Mexico, you're lending to them and the New Mexico market tanks. There goes your loan portfolio.
Yeah. Well, and it's interesting too, like you say, that reputation risk, they found that the reputation of banking cannabis may not be a problem at almost the exact same time that the regulators was, okay, we're taking reputation risk out of our criteria. So right. As you say, that's not the only issue. You've also got the issue around bankruptcy and things like that.
Exactly. There's a lot of different legal issues here. We've only scratched the surface. So as more banks get into it and we start to get into maybe the thousands of banks and credit unions banking this, I think we're going to see some of those other issues get addressed and resolved. We just have to get past this first hurdle.
That makes sense. Well, speaking of scratching the surface, we could go on a lot longer as well. But if people want to find out more, I mean, Southwest Capital, Association for Cannabis Banking, what's the best way to be in touch?
Best way to get in touch with me would just be my personal email. It's J like James, M like Michael, Beard, Beird @gmail.com.
And I know you've
on LinkedIn. I'm on LinkedIn as well.
I was going to say, I knew you have a very active LinkedIn profile. Post that link as well in our show notes.
And I have to put a plug in for my book.
Ooh, Cannabis Banking. And
it's out by Wiley, came out in February from Wiley. It's a reference textbook.
I will post a link to that as well.
And covers all aspects of it. But we're excited. We're very positive, Glenn. We think this is the place where we need to be. And I think 2026 is our year to rock.
Michael Beard, man of many hats. Appreciated your time. I really enjoyed talking to you.
Enjoyed it, Glenn. Thank you to you and to all your listeners.
In hindsight, I had to remember that talking about cannabis banking, which we've covered a lot in the past, back when it was a little bit more of a controversial topic, when the phrase, I can't remember if he used it or I used it, but the phrase blowback came in. I'm like, oh man, if John Best was here, he'd be having a field day with the double entendre on that one. But appreciate Michael's time talking about all this stuff. We got a link to his book on cannabis banking, kind of the how-to that he talked about, as well as a link to both of his operations that are out there. So interesting guy. Really enjoyed his perspectives from J.D. Power as well. So I hope you got as much out of that as I did. With that, another episode of the Big Cast in the books. As always, my name is Glenn Sarvati, and you can track me down via my firm, 154 Advisors. Probably the easiest way to do that is by tracking me down on LinkedIn. You can find the Best Innovation Group on LinkedIn as well, and our Grand Poobah, John Best, at JB FinTech. Also, you'll find him on LinkedIn or the Best Innovation Group website, big-fintech.com. There you'll find lots more about the company, and under the media tab, you'll find lots of past episodes. We've been hitting the conference trail hot and heavy over the course of the last several weeks. You'll find our conversations with some of the key highlighted companies, some of the real kind of standouts at Finovate, at Venture Tech, at Money 2020. We've been around. We've been talking to lots of folks. We really enjoyed doing that, and hopefully you do as well. So track those down. Have a listen if you haven't already. We'd appreciate it. We tend to have new content every Tuesday. And we've got new content already coming up next week. John Best and I are going to be getting together for one of our conversations. And then after that, the week after, I believe we're going to have our year-end, our typical kind of headline stories, top stories of 2025 with a roundtable of some of our experts. Always a popular episode. I hope you join us for that one as well. Always love to hear from you. Drop us a note via the Best Innovation Group website or via any of the LinkedIns that we just talked about. Again, my name is Glenn Sarvati, and as always, thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech. Email info@big-fintech.com. or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.